Hello and welcome to another MCO market update on HBAR. Here the HBAR chart is pushing. We have seen a reaction to the communicated micro support region. I think this is the support zone I communicated yesterday on Discord in our membership. It's between 17.1 cents and 17.8 cents. The idea was that we should get at least one more high in this blue C wave, so that we get a 5-wave move, right? In blue wave C of 3. Or maybe it could be the white C wave in a larger A wave. We don't know which one it is. Both wave counts are absolutely plausible because there is a potential that in our white scenario, which we talked about in previous updates, this rally is only a B wave, okay? And it could form as an A-B-C structure in an A wave. Then we get a B wave and then rally in a C wave. And that would be a larger ABC, and then we can go down again to test support again. It would not necessarily be bearish overall, but it at least reminds us of the risk that we might test the April lows once more, maybe even a little bit lower. So key support here for the overall bullish scenario, as you know if you watched previous videos, is located around 9.8 cents. Now at the moment though, the short-term trend is up in both of these scenarios. At least that was the idea yesterday, because we were still holding above even the nearest support level. So until we break below micro support, there is typically no indication at all that a top is in. So we are still tracking for directly higher prices, even though now obviously the risk is higher than yesterday. When I made the update yesterday, we were, I think, just in the support region, and or maybe had already reacted to it a little bit, but we were sort of in that area. Risk was of course much lower because the price was lower, closer to key support. Now we are far away from it. And I can't really give you any additional support level. I mean, it would be the last swing low. I mean, if we want to raise the key level higher, it would be this one, right? It would be the 18.3, 18.4 cent level. So as long as the market holds above this level, 18.3, 18.4 cents, there's absolutely no sign that a top is in. Any break below it would indicate a top of sorts. We would then need to look at the structure, but the direct trend to the upside can continue against that low. So in the blue scenario, we're tracking here a diagonal structure in which we've seen a 1-2 setup, A, B. We're now in the C wave of the wave 3, then there could be a 4th wave and a 5th wave. That would be the blue scenario in which we can watch for higher prices, as I said, in a diagonal pattern, which would then complete a wave 1, then a wave 2, and so on. You know, that's how we would track this. And in the wave 1, we want to see 5 waves. So once wave 3 is complete in blue, we will add support for the wave 4, but it's not complete yet. At least it doesn't look like it. In the third wave, what we normally appreciate is if the price could get to the 138% extension. In this case, that would be around 21.3 cents. As you can see, we're close, but we're not quite there yet. And that would be the next upside level to watch. In addition to that, the 123.6 extension can be a reasonable target as well. That's at 20.4 cents. But that would be really the bare minimum. We pretty much reached it. But I would normally want to see the third wave get a little higher, so we can really call it a viable third wave. And as I said, as long as we hold above that last swing low, no sign of a top. Ideally, we stretch a little higher to get to that 138% extension, maybe even higher. I mean, there's no sign of a top, but just highlighting here what the next levels would be. And to really call it a viable third wave, minimum expectation, my personal minimum expectation, is the 21.3 cent level. That's the update about HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.